but this is a segment where we start focusing on all your personal finance queries. Harshvardhan Rungta is our expert for the day, and Mukesh Goyal is our first caller, and he calls in from Nanur. Hi, Mukesh.
Hello.
Hello. Can you tell us your question?
I want to invest 2 lakh rupees in any of mutual funds.
As a lump sum.
Lump sum.
Okay. And do you have a goal, a current investments, time horizon?
I want to.
We can't hear you. Could you tell us your question loudly?
Hello.
Yeah. Why do you need the money? Is there a goal, Mukesh? When will you need the money? In 5 years' time, 10 years' time? Is there some amount of money you're looking for?
It is in the around 10 years horizon.
All right.
For the marriages of our children or otherwise.
All right. Go ahead, Harsh. Anything else you want to learn from him? What would your advice be?
Well, Lata, what we have understood is that he needs to make an investment of 2 lakhs in the form of a lump sum for a period of 10 years. And, with what the query we have is that he needs to accumulate the corpus to a tune of about 50 lakhs for marriage, retirement, or any other purposes. Now, having seen his portfolio, I do understand that he has an equity heavy portfolio because he seems to understand equity. So, and considering that he has a 10-year time horizon, I would suggest that he invests this 2 lakhs again into equity. However, I strongly recommend that he does not invest into equity as a lump sum, which means that I don't want him to go with the entire 2 lakhs and invest into equities today. Instead, I have a suggestion which is in the form of a systematic transfer plan. It's an STP. By this, what he could do is first go with the 2 lakhs to a mutual fund, invest the entire amount into the liquid fund, which is 100% debt. So there is no equity exposure whatsoever. From here, he should transfer every month an amount of about 9,000 rupees into an equity scheme. Now, in this manner, the entire 2 lakhs will come into equities in a period of about 2 years. Now, we have a time horizon of 10 years in place. So, from the 2nd year to the 8th year, he can remain invested into equity. And 8th year onwards, he has to start withdrawing out of equity because his goal is just going to be 1 or 2 years away. So, he needs to start withdrawing from equity and come into debt. Now, specifically naming the schemes which he can use, he has made certain investments into HDFC mutual fund. Okay. And I see that he has an investment into HDFC top 200. So he could use this mechanism and invest into the existing scheme of HDFC, go into the cash management treasury advantage plan, which is a liquid fund, and from there transferred into the 9,000 rupees that I mentioned into HDFC top 200. So I think that would work for him in present scenarios.
All right. Thanks for that, Harsh. The next caller, actually, let me read out his SMS since we're not able to connect to him. He's Ramnik Sethi from Delhi, and he's asking if he can invest 1 lakh as a lump sum. How should he allocate the money? He is aged 35 in professional service. He has insurance, 17,000 yearly is what he pays, and sum assured is 1 crore. His current investments are in HDFC Equity Fund, HDFC Prudence, Fidelity Tax Gains, Reliance Growth. That's a total investment of 3 lakh, 3 dependents.
Yeah, and I believe he wants to make this investment of 1 lakh for a period of, do you have the tenure?
He said 6 years, sorry. Yeah, it's an investment of 1 lakh, time period is 6 years. He wants to convert it into 2 lakh.
Yeah, well, now in this case, when he needs to make an investment for about 6 years and he knows that 1 lakh has to grow to become 2 lakhs, we see that he will need to generate a CAGR of about 12.25%. Now, if he does that, if any instrument that helps him generate that kind of returns, he will achieve his target of 2 lakh of rupees. Now, fortunately for him, we have few NCDs, the non-convertible debentures of a couple of corporates listed on stock exchanges. Now, to name a few, they are India Infoline, Manappuram Finance, Shriram Transport, or Mudhot Finance. Now, you have these companies which have, which have NCDs listed and are actually today giving you this kind of returns. Now, so he could choose one of these or a couple of these to split his investments into 2 or 3 parts and invest into these NCDs. these will give him an assured return, at least a coupon assured, saying that he will reach his target of 2 lakhs. Okay. Now, a caution point that I want to make is that he needs to very clearly understand there are certain risks involved in investing into these secured NCDs. So he needs to understand them. He needs to go through the credit rating of these NCDs and then take a call. And also, for just a reference and knowledge perspective, there are other NCDs of State Bank of India, L&T also listed. But since they enjoy better credit ratings, the returns that they offer is between 9.5% to 10%.
Yep.
So since he needs a little higher return, he could probably evaluate the risk involved and take a call accordingly.
Fair point, Harsh. We'll have to leave it at that. Thank you very much for joining us.